Last night I told you about how one consequence of the trade war is that it's making used cars more attractive than new ones because the steel and aluminum tariffs make new cars somewhat more expensive. Today I want to look at things from, another angle, the Canadian angle. I'm talking about Magna International, MGA. It's one of the largest auto parts suppliers on earth. They make all sorts of car parts, and they also assemble complete vehicles for the major automakers. Now, Magna is a well-run company with a good long-term track record. Stock was up 30% last year, but after running up over the course of the spring, it's given back all of its gains and then some over the past few months, including a brutal 8% sell-off yesterday. What happened? Magna reported a top and bottom line miss yesterday morning, and to make matters worse, management cut their full-year guidance. Now, some of that's, though, from the strong U.S. dollar, some of it's because their joint venture transmission business is having some trouble, and some of it's from the expected impact of the tariffs, varied. But with the stock now down almost $14 from its highs, I got to wonder, maybe it's been punished enough. So let's check in with Don Walker, the CEO of Magna International, get a better sense of what's going on here. Mr. Walker, welcome back to Mad Money. Good to see you, Don. Have a seat.
Good to see you.
All right, Don, now I know your company is one company, which is the best single auto parts and assembler manufacturer, and I've said that since 1987 when I first heard about you guys. But suddenly I got all these questions, and it's about, how about NAFTA? How about China trade? How about Canada and our president? How do you negotiate as a CEO what is clearly a different kind of environment than even a year ago?
Well, there's lots going on, and you have to worry about the things you can control, but it's certainly having an impact on our stock. The concern, the tariffs is having an impact. The concern about NAFTA and the production volumes is having an impact as well. And so we did have record sales, record earnings. We missed consensus a little bit, but there's a couple of one-timers this quarter. And we do have a few issues we have to deal with in a joint venture in China for our trade.
Well, I just actually was going to turn to that. I said joint ventures, particularly in China. We expect this headwind will impact this GetTrack joint venture. And the mix for transmissions in China has been difficult. Is this part of the trade war?
No, it doesn't have anything to do with it. Okay. In China, the manual transmissions is going away faster than we had anticipated.
Oh, okay.
And we've had, in the last quarter, there's been a couple of our customers we're not drawing as quickly as we anticipated they would, but it's a bit harder to understand the volumes by car line over there quarter to quarter.
You mean because they're just opaque?
No, just the market moves much quicker.
Oh, okay. Now, you did talk about, you quantified tariffs. It turned out to be not that much.
Well, we have done a very detailed analysis. Right. We're Canadian-based for headquarters, but we actually have about 25,000 people in the States and 27,000. So we actually have more people than the 23,000 we have in Canada. If the tariffs stay the way they are, and who knows if anything more gets ratcheted up in China, it's about a $60 million a year hit. Now, we would hopefully be able to talk to our customers, and it has to be passed through the end consumer at some point in time. But I also think at some point in time, NAFTA does get renegotiated and the tariffs within NAFTA go away because it's bad for all three countries.
But you did talk about the notion of maybe they would stop the pushing of assembly of plants to Mexico. Now, would that matter? Aren't you agnostic about where you build stuff?
We are, but I think that there's a couple
of companies aren't.
Yeah, yeah. I think you have free trade from Mexico. So if you put an assembly plant in there, they can ship wherever they want, and they do have lower labor. So I think the lower labor does have an impact, but it's the ability to ship everything from there, any vehicles from there anywhere in the world. From us, doesn't really matter where the assembly plants go because we put the supply plants close to them, the big parts, and the other parts we can ship them.
All right, now let's pull back for a second. If I were a major auto company, a Ford, a GM, I would say, look, we've got to make more money. Some people think it's peak autos. We had some SAR numbers yesterday. Some people think that there's just issues with tariffs. Let's call Magna. They can make it cheaper in the weekend. I mean, that's got to be happening too.
Well, long term, I think there's going to be some new players coming in the industry, and I think there's going to be new forms of mobility, both areas that we're heavily involved in because we not only make a lot of the car, but we can also design complete vehicles and build them. In fact, we just announced a joint venture with Beijing Automotive to design full electric vehicles, and we're going to produce them in a joint plant over there. It has a capacity of 180,000 vehicles. So we just announced that about a month ago, and so there's so many opportunities coming up with autonomous driving, new powertrain electrification, but lots of growth areas.
Well, when I went over the quarter, I said, it wasn't clear to me, but you've got to be spending for electrification and autonomous driving, and I want you to spend on that. That's the future. I mean, could that have hurt margins?
No, there was a fire in a supplier plant that shut down a lot of our customers. Now that's over, so that'll come back.
It's a little bit like Job here. I mean, you guys have just some bad luck.
Well, I do think I think it's been overreacted to, but you know, we also had we're launching the new Mercedes G-Class, which is a great new vehicle, but there was a supplier problem there, so that should come on stream too. So we had a number of one-timers. But we do have some issues to deal with in our transmission plant.
But at last, I want to leave with, because you know I've liked your company for so long. Just briefly, just state, look, this that you're used to tougher times. You've been around for a long time, and this isn't such a bad time, and you're going to do well.
I think the industry, it's the highest tech industry in the world. Right. We have lots of technology. We're spending a lot in R&D, so I think there's huge opportunities globally in the automotive industry. All
right, let's leave it at that, because it's not like the stock's 52-week high. It's much closer to a more reasonable valuation than I'm used to. That's Don Walker. He's the CEO of Magna, which is a great company. Mad Money's back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.